Are buyers surging back into the Melbourne property market, and are prices finally stabilizing? Let's look at the most recent data to see what it means for the market going forward. Now, as some background here, there's been a few stimulatory factors that might increase buyer interest. The most major one, of course, is the RBA has cut rates by another 25 basis points, reducing the official rate, to an all-time low. Now, while banks have not passed on the full extent of this rate cut, they have reduced rates to some extent, which will make debt cheaper for people going out to buy property. We've also got APRA's changed the serviceability requirements, which occurred quite some time ago, but that also increases people's access to debt, which makes it easier for them to go out and borrow to buy property. So let's see how that's actually manifested in the data. Now, in the data, we've got some positive information for the Melbourne market, but it's not strongly positive. The positive information really comes from clearance rates and from the number of properties coming to auction. So clearance rates have remained relatively steady in the mid-70s, but it's fluctuated quite a bit in that 70s range. So sometimes it's low 70s, sometimes it's high 70s. It fluctuates quite a lot week to week, but that's a relatively healthy clearance rate, suggesting that vendors are either more willing to accept a slightly lower price, so they're more realistic, or buyers are more willing to go out and purchase property. Nevertheless, it suggests some clear confidence on the part of both vendors and buyers to go ahead with the transaction. The second major positive, of course, is the number of properties coming to market. It's actually quite a lot of properties coming to auction in Melbourne. Now, obviously not all of these properties ultimately sell, but there are quite a lot of properties coming to auction. Some vendors might withdraw their property prior to auction, so these auction rates might be a little bit misleading, but nevertheless, there's quite a lot of properties, suggesting vendors are confident enough they'll get an acceptable price to actually go ahead with an auction. Again, that's a positive signal about the market. Now we can then move on to prices, which is where we really need to take a little bit of a second look at those clearance rates and the number of properties, because prices have been basically stable for the past year. This is much the same as in Sydney. Basically, prices haven't ticked up despite these healthy clearance rates. What this really suggests is that while there's interest on the part of buyers and sellers to actually go through a transaction, it means that vendors are now more realistic about the price their property will get, and buyers at that more realistic price are willing to purchase. Put differently, prices haven't increased, and what this really suggests is that vendors have become more realistic. So property prices are now reflecting what the market is willing to pay for those properties. Now, if we look at this, this basically means buyers are returning, but at the right price, suggesting there's not so much a surge in the property market, so much as a willingness to return now that vendors are a little bit more realistic about the prices they're going to accept for properties. Now, this is perhaps a positive signal going through until the end of the year, but not a strong positive. It suggests going through until the end of the year, we'll probably get more of the same, unless there's a significant reason to expect a major difference. I'd say more of the same because it would be unlikely there'll be any other major regulatory shock that would affect the property market going through until the end of the year. Now, there's the possibility of another RBA rate cut that could have some additional stimulus for the property market, depending on how much the banks pass on in terms of that rate cut. However, as we get more and more rate cuts, it is a little bit of a negative signal to the market, suggesting the RBA isn't very confident about the economy, or suggesting that employment and wages are relatively sluggish, which of course itself impinges buyers' ability to go out and actually purchase property, even if there is a rate cut. So I hope this gives you a bit of an idea about the relatively positive, but not ultra positive information we have about the Melbourne market, what it means in terms of what might happen to the market going forward, and what it means in terms of prices. And it basically suggests that while buyers are returning, vendors have become more realistic, which is really what's driving that buyer resurgence into the market. So I hope the video has been interesting to you. If it has, it would be great if you click the like and subscribe buttons, and I hope to see you next time. Bye.